This critique explores a collection of presentation materials and demonstration scripts for the RTC FRC software, a system designed to streamline financial consolidations, multi-currency reporting, and period-end adjustments across disparate ERPs. But right now, the pitch reads a bit like a waiter handing you the kitchen's thermodynamics instead of the tasting menu. So we're going straight into how we can align this messaging with what a CFO actually cares about.
Yeah, it really is a massive technical achievement under the hood. We're looking at this engine that, pulls general ledger, AP, and AR transactions from this whole maze of cloud and on-prem ERPs. It standardizes local GAAP rules, translates currencies, and spits out a clean number.
Right.
But getting someone to buy into that complexity requires more than just, proving the software functions.
Absolutely. Framing the product's capabilities around the user's emotional and operational transformation elevates the pitch from a mere software tutorial to a compelling business case.
Yes, but right now, the material frequently falls into describing functional, granular user interface actions, rather than anchoring those features to the overarching relief they provide.
It's very point and click.
Exactly. Take the section on intercompany reconciliations. The narrator correctly identifies that matching these transactions across subsidiaries is like a notorious bottleneck. But then, almost immediately, the script just gets bogged down in a literal tour of the screen architecture.
Oh, the tab listing?
Yeah, the narrator spends valuable time listing out the 5 specific tabs at the top of the window, like companies, transactions, relationships, reconciliation, and reports.
Reading out the navigation menu is essentially reading a user manual out loud.
It really is. And after naming the tabs, the script just describes the process of clicking a confirm button on individual line items down a list.
Wow.
It completely distracts the listener from the strategic value. The value isn't the ability to click confirm. The value is mitigating the massive pain of manual period and matching.
Right, we really need to shift the focus from the mechanics of the software interface to the strategic outcomes, and frankly, the emotional relief for the CFO and the controller.
Totally.
The presentation should highlight the end result first and only describe the UI to the extent that it proves how easily that result is achieved.
I agree. The current approach forces a viewer to care about the how before they even understand the why.
So, picture how they should actually sound. Instead of saying, there are 5 tabs, let's go to Company A and look at the chart of accounts, you start directly with the value proposition.
Right, hit them with the benefits.
Exactly. You could open by saying, because intercompany reconciliation is a notorious bottleneck, FRC automates the matching of dates, amounts, and references, leaving you only the true exceptions to review.
That's so much punchier.
It's like trying to sell a luxury sports car, right? You don't sell it by reading the engineering manual for the transmission. You describe the thrill and the smoothness of the drive first.
That makes sense, but could the evidence also support a different conclusion? Accountants aren't exactly buying sports cars.
Fair point.
They are highly skeptical, highly detail-oriented controllers who will get fired if the mechanics fail. So don't they need to see the gears turning to actually trust the system?
They absolutely need to see the gears turning, but they only care about those mechanics after they're sold on the destination.
Right, the sequence matters.
Yeah, if you don't convince them that the algorithm is going to save them like 40 hours a month, they won't stick around to learn how the reconciliation tab functions. You secure the emotional hook, and then you explain the mechanism.
So the emotional hook is essentially the gateway to the technical validation.
Right. Think about the underlying mechanism of that matching algorithm. When FRC matches dates, amounts, and references across subsidiaries, it's cross-referencing different base currencies, different time zones. It's doing massive heavy lifting.
Oh, huge amounts of work behind the scenes.
So by front-loading the relief, the idea that the system automatically handles 90% of that reconciliation, we earn the right to show them the interface where the remaining 10% of exceptions are managed.
That is a crucial distinction. We aren't ignoring the technical details. We are framing them as the mechanism of relief.
Exactly. But getting that emotional buy-in isn't just about the opening pitch. If you promise a stress-free close, you instantly break that promise if the very first visual is a chaotic, massive ownership grid.
Oh, definitely.
The visual sequence has to match the emotional promise, establishing a chronological narrative flow that mirrors a typical financial close process, builds intuitive understanding across these disparate demonstration modules.
And the current sequence of the source material feels really fragmented and siloed.
Very disjointed.
Yeah, the audience is taken through a general overview and then plunged straight into group hierarchies. We are suddenly looking at intermediate holding companies like Chenille Group and Delishma and staring at complex 50% equity ownership grids.
Right out of nowhere.
Exactly. Then, without a clear bridge, we are jumped into intercompany reconciliations and finally brought back out to a period-end dashboard. It forces the viewer to mentally piece together how these tools interact in a real-world scenario.
It induces the exact cognitive overload the tool is meant to cure. I mean, if I am dropped into an equity ownership matrix for Chenille Enterprises Limited, and I don't know why I am looking at it, I'm going to lose the plot.
Yeah, you're just looking at boxes.
It's like being shown distinct separate rooms in a house, but never being given a floor plan.
And the structural mechanics of a consolidation hierarchy are inherently complicated, you know? When you have a parent company that owns 80% of a subsidiary in the UK, and that subsidiary owns 50% of another entity in France.
Oh, it's a nightmare.
Right, the consolidation logic has to account for minority interests, different base currencies, different tax jurisdictions. It's just a dense web of logic.
Which is why we need to reorder the presentation to use the period-end dashboard as the structural backbone. We should treat that dashboard as a home base, an anchor that the narrative continually returns to.
Okay, so map that out for me.
You use the dashboard to identify a problem, dive into a specific module to solve that problem, and then return to the dashboard to show the progress.
That fundamentally changes the dynamic. The dashboard acts almost like an air traffic control tower.
That's a perfect way to look at it. The dashboard is the control tower. You don't zoom in on the landing gear of a single 737 until the tower tells you there's a warning light.
Right.
You start on the tower, assess the field, and then go out to the runway.
So, applying that to the revised flow, you would start the demonstration entirely inside the period-end dashboard.
Yes.
You draw the viewer's attention to, say, a color-coded box that is specifically marked overdue for an intercompany reconciliation task between Chenille Enterprises Limited and Leshme.
Exactly. Immediately, we have context and narrative tension. There is a specific problem on the board. Now we know why we are about to look at Chenille Group.
From there, you dive into the intercompany module to resolve it. You show the system identifying a specific, say, 8,400 pound discrepancy.
Right.
And this is the critical step that the current script misses. Once that journal entry is created, you zoom back out to the dashboard.
The home base.
Yes, you show that overdue task turning green and marked complete.
Okay, but building on that point, what if we looked at it from the perspective of a CFO who has 50 companies? Is there a risk that starting in the weeds of hierarchy trees might overwhelm them before they see the simple dashboard tracking? Well, actually, the larger the portfolio, the more vital the dashboard becomes. If you start a presentation with a 50-company tree view, you are communicating complexity before you communicate control.
Ah, I see.
The dashboard represents control. By establishing that home base first, the viewer knows that no matter how deep into the legal or regional weeds we go, there is always a clean visual map keeping everything organized.
It provides profound psychological safety. They know they won't get lost in the software because the dashboard will always catch them and orient them. It proves the system scales.
Exactly. And that sense of control is intimately connected to the ultimate end goal of the user. Because the dashboard proves you have control over the internal process, but the ultimate output isn't the dashboard.
It's the external reporting.
Right. The whole reason finance teams navigate this grueling month-end workflow is to deliver accurate data to the board of directors. Highlighting the Excel add-in as a bridge between familiar habits and secure data creates a powerful, persuasive hook that currently gets buried late in the material.
Oh, completely. The source material contains an absolutely brilliant positioning statement. The phrase is, FRC keeps the data right while Excel makes it look right.
I love that line.
It is a phenomenal summary of value. But this gem is buried near the very end of the overview video. And furthermore, the rich ecosystem FRC supports, ingesting from ERPs like Sage and Acumatica, and outputting to IFRS, US GAAP, and IXBRL formats, it's just presented as a dry list of compatibilities.
Like reading a phone book.
Exactly. Rather than a solution to a massive risk area.
Because those aren't just acronyms, They represent fundamentally different ways of viewing a business.
Right. Moving data from a local subsidiary level US GAAP standard to a parent level IFRS standard isn't just the simple currency translation.
No, it is a fundamental mapping of logic. Depreciation schedules differ. Lease accounting treatments differ under IFRS 16 compared to ASC 84-2.
Oh, totally.
So when the script just glosses over the IFRS and XBRL outputs as items on a checklist, it is missing a huge opportunity to show how the software's central data lake actually bridges that logical gap mechanically.
And when teams don't have a system like FRC, they try to bridge that logical gap using massive, fragile Excel workbooks. They export from Sage, they export from Acumatica, and they try to use VLOOKUPs to consolidate the numbers.
Which introduces massive operational risk.
Yeah, the current script, calmly mentions that Excel can be error-prone with broken links, leading to skepticism amongst those using them. It mentions the skepticism, but it doesn't leverage the sheer terror of it.
The terror is the selling point. We need to elevate the Excel add-in and the multi-output capabilities to a central pillar of the pitch. We have to directly contrast the emotional anxiety of those broken links with the profound relief of FRC's live data drill down.
So to restructure this, we physically move the visual elements like the Excel, Adobe Illustrator, and IXBRL icons much earlier in the narrative. They shouldn't be an afterthought.
Let's put the viewer right in the room where that anxiety lives. Picture the boardroom. The CFO is in a high-stakes presentation, projecting a beautiful, highly formatted Excel chart for the board of directors.
Okay, setting the scene.
Right. A board member zeroes in on a spike in operational expenses for Q3 and questions the figure.
Oh, man. In a legacy process, the CFO starts sweating. They have to say, I'll make a note and get back to you because that Excel chart is just a static image disconnected from the underlying ERP.
Exactly. But with this system, the CFO highlights that single cell right there in the Excel presentation, uses the FRC add-in, and drills down live in the meeting.
Live in the meeting?
Live.
Didn't we just establish that we want to avoid getting stuck in the weeds of the software?
It's completely different because of the narrative context.
How so?
Listing out the 5 tabs of a reconciliation screen was mechanics without purpose. But drilling down from a high-level executive Excel cell to a granular AP invoice in 2 clicks is the ultimate flex of the system's data integrity. It is the mechanism of trust.
Ah, I get it. It proves that the beautiful formatted number isn't just a typed-in manual entry, it is tethered to reality.
It is the hero moment of the entire pitch. You are taking the shared industry trauma of bad data and you are immediately demonstrating the antidote.
That's really powerful.
Right? Because when you tell a user that FRC acts as a single auditable system of record, that just sounds like corporate marketing jargon. But when you show them that their Excel chart is physically tethered to verified, normalized data from a disparate ERP, that is a revelation.
And it validates the investment they've already made in those underlying ERP systems. You aren't forcing them to abandon Sage or Acumatica, and you aren't forcing them to abandon their beloved Excel models either.
No, you're just giving Excel a titanium foundation.
Yeah. So, to synthesize the shifts we've mapped out today, it really comes down to narrative momentum and emotional intelligence.
Absolutely. First, frame your features around the operational relief they provide. Tell them how the algorithm is removing the pain of matching transactions before you show them the interface buttons.
Second, use the period and dashboard as your chronological spine. Treat it like an air traffic control tower to tie your fragmented modules together. Start with an overdue task on the board, dive into the mechanics to solve it, and return to see it turn green.
And third, front-load the massive value of the Secure Excel add-in. Elevate that brilliant phrase, FRC keeps the data right while Excel makes it look right, and show the CFO curing board-level skepticism with a live, instantaneous drill down to the source data.
The technical foundation of this material is incredibly strong. I mean, the engine is clearly built to handle extreme complexity. We warmly invite the creator to implement these structural and narrative changes and submit the revised presentation scripts back to us for another review. With these shifts in perspective, it can evolve from a technical manual into a truly compelling business case.
You aren't just explaining the thermodynamics of the kitchen. You are inviting them to experience a radically better way to work. Give them the experience, and the mechanics will sell themselves. Until next time, keep refining, keep questioning, and keep improving your work.